Nice start, Boeing notwithstanding. Boeing, remember, is 11% of the weighting in the Dow Jones Industrial Average. I'll put up some of the Boeing-related stocks here. And suppliers to Boeing are weak as well. United Technology, a lot of people don't know, they're a supplier to Boeing. Spirit Aerosystems, that's another one. Triumph Group's down about 4%. Again, all the suppliers to Boeing on the weak side. If you look at the sectors, though, it's really a much needed bounce. We've had 7 or 8 days, essentially, of almost straight down here. So China's bounced a little bit today. They're doing a little bit better here. There's been some reports out about the exports doing a little bit better in the month of March. Semis are bouncing a little. Energy's bouncing. Industrial's still down. Transport's still down. I think this would be the 12th day in a row if the transports are down. That would be the longest since 1969. So we're waiting for that to bounce. We're oversold. I know it sounds amazing because we were just near recent highs, but we're down 2% in the S&P in the last since the early part of March. Banks are down almost 4%. The Russell has been notably weak as well. Transports, we've been covering that pretty extensively. And even the healthcare group, ever since people started talking about Medicare for all, healthcare's been essentially straight down. So we're due for some kind of a bounce here, unless something a lot more serious is going on. As for where we go from here, forget about trade, the Fed, excuse me, and even the trade deal. Slower global growth is what's killing S&P 500 earnings. So this was out from FactSet over the weekend. This was the most passed around note I saw over the weekend. So FactSet now has first quarter earnings down 3%. Refinitiv has it down a little bit more than 1%. But regardless, it depends on where your sales are. If more than 50% of your sales are inside the U.S., you're more U.S.-centric. Earnings are up 1% for the first quarter. But if you have more than 50% of your sales outside the United States, you're more international. Earnings are down 11%. That is a pretty stark reminder that it's the slower global growth story, not just in China, but in Europe also, that is really weighing on things. And even if you get a trade deal, China's made it clear they have other issues. Even if they have the trade deal, Europe has other issues. Even if a trade deal, it would certainly help, but it's not going to make everything go away. Finally, just want a quick note here. Happy anniversary to one of my favorite ETFs. The Triple Qs turns 20 today. Of course, that's the NASDAQ 100. It's largely a large cap growth index or ETF. It's become a proxy for the tech market, although a lot of stocks are not technology stocks that are in it. It is the 6th largest ETF out there, the 2nd most traded, $67 billion in assets under management. If you wanted to own FANG a few years ago, you couldn't have done better if you wanted to buy a single ETF than this one. It's largely FANG holdings at the top, Microsoft, Alphabet, Apple. Look at that. They're together more than 50%. Assets under management are right there. And it's outperformed, and that's because the FANG stocks have done. So the last 5 years, you're up, Mike, about 190% in the Triple Qs. The S&P 500, by comparison, up about 150%. Nice little outperformance. There's the Triple Qs on the white line.